All right, welcome. Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. And the system is currently up 26% year to date with very low drawdowns. Now, please type in the chat that you can hear me. Okay, I'm going to assume that you can. And be sure to post any questions that you might have early on in the broadcast. That way I don't miss the questions. Okay, so let's get started. I'm going to start with the earnings edge. How did we do last week with that? You can hear me good. Thank you, Charles. Well, we traded AMD. Let's see where AMD is down here. I believe I've traded it 2 or 3 times now. That one came out a slight winner, up about $150. What's interesting is you can see here, you can see my overall P&L is actually, $3 basically at break even, but then the account's down, 28%. So you can see that all this is due to commissions, which is fine. I tweaked this system last, 2 or 3 weeks ago or a month ago. And I tweaked the way that I exit. And so what I'm doing is I'm only winning about half the trades instead of trying to win 75%. The thing is, the winners are larger than the losers. So my average win is about $500 and my average loss is about minus $200. That's based on back testing and taking all of these, the actual trades that I opened up, and using a different exit criteria. The overall record for the earnings edge is 22 wins, 9 losses, and 3 ties. And since I've applied the 8 filters, my record is 7 wins and 4 losses. And again, down about 28% year to date. That's all due to commissions. Okay, so that is the earnings edge. Had a winner there. Let's get into the Premier Level 5. PL5. On the PL5, let's talk about that. This basically uses options in kind of a different way. Most people use options and they increase their risk and they try to increase their reward. In this system, I use options to decrease the risk and outperform the S&P 500. So I'm not looking for that big win like I am with the earnings edge. I'm looking for that conservative return. So I've seen the system draw down about 3 to 4% maximum drawdown and up about 5.5%. And this is since April 8th of this year. In that time frame, the S&P has been down 19.5%. That's a much larger drawdown. And it's currently down about 14%. So you can see that the system is vastly outperforming the S&P 500. It'll outperform the S&P 500 in all markets except for a bull market. In a bull market, it underperforms. But when you take all that into account, when you take the lower drawdowns into account, overall, it outperforms the S&P 500. Let's see if I have anything else to say about the Premier Level 5. No. Okay, yeah, it's up 5.5% year to date, or since April 8th. Okay, so let's get into the safe wheel. That's probably why most of you are here. Let's get into that account. You can see my P&L, of course. Where else can you see P&L, by the way? Does anyone else show their P&L, their net liquidation value? I don't see it. Okay. So on the safe wheel, we are with Uber. And last week I sold a put and did not get assigned. So Uber did not go down below my strike price. And maybe Uber's coming up for, let's look at the chart here. Oh, it's not really showing on this particular chart, but I think it's coming into earnings, but it doesn't matter to me. It does not matter. So what I need to do today is I still have my put hedge. So I'm thinking, should I get out of Uber and start over? Because this particular cycle is over. I'm just sitting here with my hedge. But I like my hedge. It's close to 150 days still. It's not close to 100 days. If it was close to 100 days, I'd be like looking to move this hedge. Let's see, am I within 70% of the price? So is this strike right here, 22.5, within 70% of Uber's price? So Uber's price is about $27 times 0.8, 21.6. So it's even closer than 80%. So my hedge is really strong. So I'm just going to go ahead and stick with Uber because I like my hedge here. And let's see if I can get the premium that I want. I'm going to go to the trade tab here. I'm going to go into the expiration cycle. It's going to expire within about Friday, the nearest one. I'm going to be looking at the puts. I'm around $27. So I want to, there's a lot of premium here. So we probably are coming in to earnings. Let's look at this. You can see how much higher the volatility is here in this particular cycle. So this cycle is going to be within the earnings cycle, and then you can see these other ones just drop off. So you can see that the earnings cycle is not, these aren't within the earnings cycle. So that tells me right there. So there's some nice juicy premium here, and I'm going to take it. So currently trading around, well, 26.88. I don't want to go to 26.50. That's kind of close. I'm going to go to $26. I'm going to sell that. I'm going to do one. And that has to do with the wheel strategy, and what's really good about the strategy is that everything is planned out in terms of how much capital to allocate. So I'm between $5,000 and $10,000 in my account. Therefore, I'm going to do one contract and 3 put hedges. The sizing aspect of a trading system is so important, and it's really almost never talked about. It's almost never gone over in other trading systems, and it's so important. Okay, so let's see what we can collect here, mid 114. Gonna get some nice premium here selling this put, $26 put. That's not filling. Let's go to 113, get this thing filled. Okay, good. Now, got my premium for the week, which is a lot, much higher than normal. Let's go into cover our put hedge. Let's buy a call. This call is really, it's far out there, It's just part of the system. Normally you'd probably get it around $30, but because we're coming into earnings, this one's going to be way out here at $34.50. So this put hedge isn't going to be protected as well as normal, coming into this earnings situation here. But I'm going to go ahead and buy the $34.50. Let's see, I just need one of those. A call. Yeah, that call being far away, that's just part of the deal. Okay. And that's part of the deal of collecting, $113 too. All right. So now, let me make sure, check my notes here. Now, if you want to get the safe wheel, the guidelines on exactly how to trade this, because I haven't hit every scenario live. So if you want to get every single scenario, I have a flow chart that will go through that. And I also have the 6 filters that you use to pick the right stock. So it's basically the whole system encompassed in. And I put a link in the description for that. It's only $89 right now. I've been thinking about raising that price. I haven't done it yet. But it's like a complete system that works really well. It's a level 5 system for under $100, and that's available. Okay, so that was pretty easy. How much time do you really spend doing the safe wheel? Do you come in once a week for 10 minutes and make a trade? All right, so let's get into the questions. So, John, I understand. Good morning. I understand the T plus zero line in the analyze graph, but what's the second line represent? Okay, well, let's go to the analyze graph. Here's what Uber looks like. You can see that we've got some negative deltas here, but it's not too bad. I mean, that's how much we collected on our last. We just sold that put and collected this much money, so now we have that much money at risk. But see, here's your T plus zero line here. What's the other line represent? You're talking about this teal line. This is the expiration line. This is what happens if you hold all the way to expiration. Okay. They'll have other lines in here, and it's called charm. Okay, and they'll have lines in between. They'll have a line that this particular line is today. They might have another line that expires in 30 days, another one in 60, another one in 90, and then expiration line. That's when you're starting to look at second order Greeks. But with this simple one, it's just today's line and the expiration line here. So if the stock ends at $24, looking at this right here, at expiration you make 152 bucks. Today you'd be up $100, and then you can see how that it's a sliding scale based on the price down here. Okay, Joe, I'm able to trade this on Charles Schwab IRA. Started with Uber since it met all the requirements, but might have bought a lower put since 70% versus the 1750. Yeah, when I start out, I typically go at the 80% mark. I like to keep it when it gets below 70%, I'll roll it up. So 70% is kind of that lower realm. But that's good that you can do this with an IRA in Charles Schwab. That's good to know. I appreciate that, Joe. Letting everyone know about that. Jerry, the put hedges at a DTE of 150 plus is the reason they're so far out. Why is that? Well, it is to lower the theta. That is correct, because you want your near-term stuff to depreciate faster than your far-term stuff that has to do with weighted vega. And yes, that is the reason. It's a theta thing. Joe, yeah, the 150, 200 for the long put. Sometimes you can roll to reduce purchase cost and gain more theta. Okay, Andy hears me. Andy, the IV on Uber has spiked. Not sure if there's an event. Yep. So yes, it looks like it's coming into earnings, and yes, I will trade it. Not afraid of earnings. Will. Another Monday, another drop in Uber to help us recover last week's losses. Bearish movement really helps this trade. Yes, it does. Yep. Yeah, Uber's down, what, 3% today. Alex, earnings coming up in Uber. That's right. Yep, yeah, I could see that. I tried to find it on the chart, but I don't have my chart set up properly on this particular account. But you can tell that some type of event's coming up, and normally it's earnings, based on just looking at the cycles and the volatility within those cycles. Uber earnings tomorrow before the market. Oh, so it's coming up right away. Right time to sell some good premium. That's right. Man, I hate that $5 call so far away. Yeah, that's kind of the risk that you take, and sometimes you take some risk, and we'll see what happens. Sticking to your rules and your picks, but I'm doing a second tranche. Selling a 2650 call and using some of that extra premium to buy a more expensive call. Yeah, Not a bad idea, kind of an earnings tweak. Not a bad idea. Mahesh, how interest rate hike recession will affect options market? Can we still make money in options? Yeah, so I haven't seen the interest rate hike have any negative effect on this system and our PL5 or my synthetic dragon. It's done really well this year. So yeah, that one's up about 20%. So the interest rate hike thing hasn't had any negative impact on these particular systems that I trade, these level 5 systems. Richard, since so much premium on the put, should you spend more on the call? Yeah, yeah, that's not a bad idea. Not a bad idea at all. But I'm just sticking strictly to the rules based on the back tests and everything that I've done. But there may be something in that, in doing that, paying more for that call. That kind of comes into play when you have these higher volatilities. You know how I keep the volatility? I want to keep it under maybe 100. So you start getting these vols into these over 100, 150 or whatever. Then you start having to play around with that long call. And, is the $5 long call good enough? And then what is good enough? So you get into some variables there. And that's one of the reasons why I eliminated stocks with with that volatility so high. And you can see it playing out right now as we're talking about it. Okay. I don't see any more questions or any more comments. Any more comments? Please hit the like and subscribe button. A lot of people don't see this. They want to see it, this live stream, but they don't get it. And they were always asking me for it. And it's because they have not subscribed and hit the notification bell. You got to hit that notification bell or you might not get notified and you won't see this live stream. You won't be able to get in here live. And in fact, it's going to take a day or two probably before it even shows up on your feed. But if you hit the notification bell, you'll be able to see this thing right away, this live stream. Okay. Oh, new comment. Let's see. Okay, so I got some more comments down here. Did I get Richard in here? Let's see. Yeah, talked about that. Savet, what criteria do you use to determine which put to sell? Well, I want to make sure that I sell a put that is at least 1%. So right now with Uber trading at 26.58, I want my put, I want to get at least 27 cents for it, or 26 cents. And if I get more than that, it's just a plus. And also I want to make sure that I'm out of the money. So I meet those two criteria. I'm out of the money and I'm getting at least that 1%. Today is a little different. I just went, what did I go, one strike out of the money, and I collected quite a bit of premium. Normally, you don't see that kind of premium. But because we're coming into earnings, that's why it's there. And Will says, I like spending like 20-25% of the premium on the call with these wild premium prices. Yeah, that's not a bad idea. Probably need to back test it, see what it looks like. But it sounds like a pretty solid way to go. The underground sausage. Perhaps the reason for why the $6 call so far away is because the market is compensating for any potential severe moves up. Yes, of course. That's what happens in earnings. You see these crazy moves and the premiums jump. Civet. How does a safe wheel manage or recover from a grind up market that never touches the upside call? That's happened. Let's see here. If I go to my monitor tab. No account statement and profit and losses. So APA did that. See that? APA is a loser. Lost $256 on it, so it grinded up. But how often does a stock just grind up perfectly? I think it's happened once this year, maybe twice, out of maybe, I don't know, I'm just kind of guessing, maybe 20 cycles or 25 cycles. It's a rare event. If it continued to happen, yeah, the system will struggle. But the backtests show about a 10% return over time, even in bull markets. The hef, notify plus all. I'm assuming you're saying hit the like button and the notification bell. Okay, I'm gonna give it just another second to see if there's any more um, comments here or questions before we move on. All right, well, one thing I always like to say, like, who else is showing their P&L? I think there's a reason behind that. And if the P&L is not real, what else are they trying to conceal? Because there's a lot to conceal there if they're not showing their net lick. Okay, guys, we'll see you next week.